As part of the benefits for the AI Insight Alternative Mutual Fund Research subscription, we offer exclusive webinars to periodically review key developments for the alternative mutual fund industry, including an analysis of performance, performance statistics, and AUM trends, among other areas of interest. This is an excerpt of our subscriber-only webinar covering alternative mutual funds for the first half of 2019. To learn more about AI Insight's alternative mutual fund research reports and to get access to future webinars, visit AIinsight.com.
First and foremost, where are we sourcing the information for today's call? We provide fund-level research reports for various alternative strategies we deem to be portfolio-oriented strategies, i.e. long-term investments. This is part of our AMF platform, which currently consists of the individual research reports, the program fee and expense report, comparative reporting, and of course, the tracking of user research through the training, education, and research log. The research reports currently cover approximately 82 individual funds and growing. We expect to cover roughly 110 funds by year end, which would represent roughly 90% of industry AUM. So that is the source for today's call. We've aggregated this info, including insights from our due diligence reviews and various data we source from managers covered by the platform. As you can see listed here, our universe is broken into 7 strategies, including alternative allocation, i.e. your multi-alternative funds, alternative credit, equity long short, equity market neutral, equity option, global allocation, and ultimately managed futures as well. So let's dive into these strategies, first beginning with alternative allocation. This particular strategy casts a wide net, so I'd like to just take a minute here to define the space, or more importantly, summarize how we define the space here at AI Insight. The largest share of assets reside within the diversified sub-strategy. These are your traditional multi-alternative funds that invest across multiple strategies, multiple asset classes, providing that single access point to multiple underlying alternative sources of return. They come in both the single manager and multi-manager structures, and a prime example we've listed here is the Blackstone Alternative Multi-Strategy Fund is a prime example. Other sub-strategies we cover include the hedge fund replication and global multi-asset strategies. The replication funds execute a systematic investment process in order to really replicate the hedge fund premia, factor, and market exposures within a liquid strategy, a liquid format. These are quant-driven funds that make heavy use of proprietary algorithms and other various models. We also have the global multi-asset funds. They invest both long and short across equity and fixed income markets through both directional and absolute return-oriented sub-strategies. They may also carry some commodity and currency exposure. Both of these sub-strategies primarily single manager structures with examples listed here in our graphic. One of the unique reporting features of our research reports includes quarterly strategy exposure updates for our coverage universe. Thus, for alternative allocation, we were able to aggregate these underlying sub-strategy exposures and give you a snapshot of what this space tends to invest in. As we can see here, equity alternatives, which includes your long, short, market neutral, and equity hedge strategies, they make up the largest weight across funds. Not surprising, given the length of the bull market, it is costly not to own equity exposure in this market and thus common among funds seeking a higher risk return profile. Other notables include your true diversifying strategies such as relative value and global macro, the latter of which would include your managed futures. Event-driven and long-short credit make up smaller satellite exposures, although we are seeing event-driven, it has been growing as an allocation in recent years. Also worth mentioning is the relative consistency of strategy allocations. As you can see, there is not a lot of significant change over the first half of the year, as these funds tend to have long-term outlooks on their underlying strategies versus taking a tactical approach, although there are certainly some exceptions.